Olivier Desbarres, currency strategist at Credit Suisse, joins us from Singapore this morning. Olivier, what's your take on it? I mean, 14 of 23 economists surveyed by Bloomberg say the central bank will leave the overnight cash rate target unchanged at 4% today.
Well, it's a very good point that the analyst community is clearly divided about today's decision, as is the market. If you look at rate pricing, it's broadly tipped in favor of a 25 basis point rate hike. But over the past few weeks, the probability that's priced into the market has been slowly eaten away, and I think it's now roughly 55% chance of a hike that's priced in for today's RBA meeting. So there seems to be a strong consensus, and I think understandably so. On the one hand, the RBA has been skipping meetings in the sense that it hasn't hiked at every meeting, giving the explanation that it probably wants to give some time between meetings to assess what is happening to the domestic and global economy. So if you take that framework into account and think that the latest set of numbers have been reasonably weak, then you would expect the central bank to pause before hiking at its next meeting. On the other hand, to complicate the picture, you've had very strong regional and global data, particularly out of China, which of course is very bullish for the Aussie commodity story and for the economy as a whole. So really, I think that the dilemma for the RBA today is whether to almost ignore this latest set of weak Aussie numbers and focus on the bigger picture, or whether it needs to stick to its kind of framework and say, well, you know, we've had this disappointing set of numbers. It's clear that our measures are starting to feed through to the economy. We need to pause and get greater confidence before we hike again. So I think the market is right to be divided. I don't think it's the easiest decision for the RBA. I'm inching towards a 25 basis point hike, but if they do that, the RBA will have to tone down the message in the sense it doesn't want to give the impression to the market that it's now embarking once again on a more aggressive tightening cycle, because I don't think that'll be the case. Is
there anything to read from the trading in the Aussie at this point in time? Currently down by about 0.4%, 91.78 against the USD.
Yeah, I don't think the price action is totally surprising. We've seen the Aussie dollar really struggle to rally above the 92 figure. So as the Aussie dollar's been gaining ground, it's been doing so less convincingly. So I'm not surprised that the market's maybe taken some of those gains back a little bit ahead of the meeting. After all, as I said, the market and analysts are very divided as to today's decision. I think if we do get a 25 basis point hike today, we will see Aussie dollar going back above 92. There is some resistance level around probably 92.40, 92.50. But again, I would expect the RBA to try and tone down its message by saying, yes, we have hiked, but we are still looking at the domestic economy and any signs of cooling. If they don't hike, of course, then I think there's a good chance that we go back down below 91.50, with the market trying to assess whether this is really the end of the tightening cycle, or if more likely this is just again a pause before the RBA pulls the trigger in May.
How about the other central banks in Asia? How closely are they tracking, the rate moves in Australia?
Well, it's a very interesting point, because I think what we've seen in the past few weeks is Asian central banks, particularly Southeast Asian central banks, moving towards a slightly more hawkish stance. We had the Malaysian central bank hiking 25 basis points when that wasn't really expected. Central bank in India hiked in between meetings. Again, that was unexpected. Bank of Thailand, Bank of Philippines have been talking quite a hawkish language. So it's quite clear that central banks in the region are looking at each other and probably also looking at what the RBA has been doing and feeling a greater degree of confidence in their economies and regional economies, and therefore feeling more comfortable about talking about policy tightening. If you look at the likes of China, Korea, Taiwan, it's not quite as clear-cut that they've moved towards this slightly more hawkish stance. Yes, Korea has allowed some currency appreciation, but they don't seem to be as convinced that the domestic and regional recoveries are strong enough for them to justify moving towards a hiking cycle. But it's clear that central banks are looking over their shoulders, and that'll be again the case for MAS when they meet in a few days' time to decide about their exchange rate policy. What's being done in the region will bear some influence, I think, on their decision.
Olivier, we had a guest from TD who said that one of the best ways to play the Aussie is to play it against the USD. What's your take on it?
Well, it does seem that, until recently, being long Aussie dollar was clearly a favoured trade. The dollar, having said that, has maintained its ground, partly because front-end yields have been supported by strong economic data. So again, the Aussie dollar's struggled really to break through 92. It's almost as if it's reaching some thin air and struggling to get altitude from there. I think if you look at the past few months, you could have argued that short Euro Aussie would have been a better trade given the pressure the euro has been under because of the Greece issue.